Hey everyone, a quick update to Senseonic. We have some loyal viewers and subscribers asking me to give an update on Senseonic, which will have a device at the FDA waiting for approval. Their continuous glucose monitoring system is revolutionary. You will get an implant in your arm which monitor your glucose level and send it to your phone. It can stay up to 180 days in the arm. This will be a more comfortable way to monitor glucose level for diabetes patients. I have made a video not too long ago, which I link up here and in the description below. It will tell you everything you need to know about the company. But first of all, welcome to High School Dropouts Advice. If you need subtitles, click on the subtitle button right here. Through Patreon, you can get into our Discord community where you can get directly in touch with me and other subscribers. From a fundamental standpoint, there wasn't any bad news. You see, at the end we had a hike in December when the Eversense 180 system was accepted in Europe and distribution began. But the FDA was not ready to review the system because of the pandemic. They plan to review the system in the third quarter of 2021. Nevertheless, we saw a nice price hike from the stock all the way up to $5. And without any bad news, we saw a correction to the current level of $2. Fundamentally, the Eversense 180 and 360 are still a game changer for the company, and they are still ahead of their competitors. Please watch my first video when you want to learn everything about this company. The market cap is only 855 million, so fluctuation like this is quite common. For all investors of Senseonic out there, there are many investors who will try to double their money and put the money on a trend. This is what happened with Senseonic. The stock fundamentals remain strong. We just need to wait for the hopefully positive news from the FDA. The likelihood that it gets approved is high because it was approved in Europe already, which has similar safety standards like the US. We can see that the stock is highly shorted with 26.5% of the float. This means that 26.5% of all stocks traded are getting shorted. I told you in my other video that a number above 25% can result in a short squeeze. The following important number we need to pay attention to is the days to cover. We have 3.12 days to cover. This means that short sellers need to buy a trading volume of 3.12 days to cover their shorted positions. I have told you that when the days to cover get to a 5 days range, a potential short squeeze can happen. A short squeeze is when so many stocks are shorted that short sellers have to repurchase the stock to pay back to the lender. As I said in my previous video, we should not overvalue short squeezes when we invest in a stock, because for a short squeeze to happen, we still need a big catalyst news. The FDA approval for the Eversense 180 could be such catalyst. I'm not sure if we can keep so many shorters in the stock to that point. Maybe the short sellers would bet on a denial of the FDA, which will further push the price down. At this moment, it can go both ways. I tend to think it will get approved because of the results in Europe, but I'm not a scientist and I cannot determine it from here. I guess the upside rewards justify the downward risk. So I would understand if someone is investing what they can afford to lose. Let me show you the short volume of the past year. We see that Senseonic is one favorite stock for short sellers, and the stock got shorted in a high volume over the last year. But we can see that the tendency is going lower. So it seems like that even some of the frequent short sellers of Senseonic are stopping to short the stock once it gets closer to the FDA's decision. This is overall a bullish sign. I also show you this. You can see that the volume of trading has declined. This is an indicator the interest for the stock is dropping because we are entering a waiting game for the FDA's result. The ones who want to buy did it. The ones who wanted to sell did it as well. Other than this, we had a small good news that the Q4 earning release was better than the estimated 2.5 million when it could generate 3.5 million. We also have news that the company is paying some of its employees in stocks. This is a common practice, but in the case of Senseonic, they gave stocks to 5 new non-executive employees. This is not a common practice. It can be good for the company because the employees will have more loyalty towards the company and work harder than receiving a salary. This might be not so good for investors because shares might get diluted when more shares are created to pay the employees. My give and take for this stock is, if you are investing for the long term, buying over time into the stock makes sense because the glucose monitoring system is by far the best on the market when the FDA approves it. The diabetes market is sadly growing at a very fast pace. So if you are a long-term investor, you should see steady growth in your investment. The downside of the stock is that it requires more patience than other stocks to see more price action reflecting in the stock. This is not an EV or drone stock which draws media attention. Diabetes monitoring devices and systems are boring for the media. So it might happen that even after the FDA approves it, that it doesn't get enough media attention for the stock to rise higher. Then it will need several quarters to prove that the system is working, selling well, and the company is growing financially before they see some movement in the price. Anyways, for legal reasons, let me tell you that I'm not a financial advisor, CPA or realtor. So always consult with an expert before making a decision. Remember that your money is your responsibility and always do your due diligence. Thank you so much and see you hopefully in the next video. Thank you, bye.